Hello, I'm Debbie Bell-Hosking at the Deutsche Bank Lounge. This time I'm talking to Michael Spiegel at Sibos in Geneva. And we're discussing the impact of regulation on trade finance for banks. Michael, may I ask you, what do you think drives the changes we're seeing in correspondent banking in the trade finance business?
I see three key themes to highlight in terms of change. One is the increase in complexity due to more and tighter regulation, and it's not entirely harmonized across countries or regions. Two is the increased operational cost due to adherence to compliance, transaction monitoring, and certainly also the prevention of cybercrime, prevention of cyber attacks. And then thirdly, there's an increase in potential reputational risks dealing with certain counterparties or countries.
And how are banks responding?
Debbie, I have recently spoken a lot about the inflection point that the industry is facing. I think you can see this on many dimensions, many impacts. Let me outline three. One is market dynamics. There's a focus on safety and soundness, on de-risking, which leads and has notably led to a reduction in correspondent banking relationships. This has been done largely on the back of regulatory pressure, to such an extent that the IMF, in its June discussion paper, has warned of a potential isolation of certain jurisdictions and emerging markets from correspondent banking. Second, there's the operational dynamics. The increased requirements and documentation requirements are leading to, even on a bank-to-bank relationship, to look towards a better hub-and-spoke model. So banks in the past had RMA setups for each and every location, each and every branch. We're now looking, due to the cost pressures we face, to harmonize this, to actually streamline this and have a more efficient communication channel. And in some ways we're also looking at models where we can actually centralize trade services. And then thirdly, there's a drive towards partnership, which is wonderful. And that is at, shall we take one example, KYC utilities, and as we're at Sibos, let me say that we're all moving much more deliberately towards using the KYC registry.
Thank you, Michael. And how could dialogue with regulators be improved?
I'm not sure I would characterize it as a need for improvement. I do actually think that the regulators have the absolute right aim, and that is to make the financial service industry safer and risk-freer. What I do think we can actually improve on is to look through the entire context and ensure that measures taken don't have unintended consequences. During July and August this year, we have undertaken a survey. Actually, the Economist Intelligence Unit has undertaken a survey on our behalf of globally operating entities, companies. So the EIU has interviewed some 300 global treasurers and chief financial officers and asked them as to how they work in this challenging market environment and how they address risk management. There's one interesting finding, and that is that the regulation point has come up not as we always think as a more complex requirement to them, but also as a potential threat that they see to the banking relationships. So what I believe we should do going forward is, in order to create an even more anticipative risk management, to create a safer environment, is to bring in the practitioners, not only from the banks, but also from a corporate side, together with the regulators, that we look through what are potential measures we could take that may not lead to unintended consequences. Other than that, I think we're on the right track, and of course, I will have to use this opportunity to say it would be very desirable if we were to be able to come to a common documentation standard, starting in one country from a KYC perspective, and then hopefully rolling that out on a more global scale, because that will help our corporates very much.
Thank you, Michael. Really good to talk to you today, and thank you for watching.